Welcome back to Liberty and Finance. We're glad to have this returning guest. Tony Giardini is the president and CEO of Trilogy Metals. He joins us this Tuesday, September 26th, 2023. Tony, thanks for coming back on Liberty and Finance.
Always happy to have a chat and catch up and tell you a little bit about what's going on at Trilogy.
We appreciate that, and we were introduced by Rick Rule, who hand-selected Trilogy Metals as one of the exhibitors at his conference where we attended for the first time, and we've been following the progress of your company ever since and been grateful for your sponsorship of our channel. We wanted to see if we could take maybe a 3 concentric ring bullseye view with your help. First, focusing on the overall metals that Trilogy is seeking and has a market to be made in, and that's the copper, zinc, and lead, also gold and silver. Can you give us your high-level view of where the critical metals are at this moment in time from a supply-demand perspective, and what is the major trend you see in the next decade going forward in that regards?
Yeah, that's a great question. And, the metals that you mentioned are all from the Arctic deposit. We also have a second major deposit that also contains copper, germanium, and cobalt. And maybe when we talk a little bit about bornite, I'll give a bit of color of what's happening there. But, when we talk about Arctic and copper and zinc and gold, and really it's more copper and zinc, those are 2 metals. These are metals that are very in demand and certainly seen as critical metals in terms of going forward, particularly the copper with respect to electrification of a grid, windmills, solar panels, and electric vehicles. And, my sense on the copper market right now, it's a bit soft. We've seen a bit of weakening in the copper price. It's sitting just around $365 right now. And I think a lot of that has to do with people's view of the situation in China and whether they're in a position where they're putting their foot more on the brake than they are the gas in terms of, future development and concerns about the demand side coming from China. But I think if we look beyond that and we start to look out to 2024, 2025, I think you see a very bright picture for copper, with a lot of people calling for significantly higher prices just on the basis of supply-demand fundamentals and the challenge that there will be to increase supply materially in the copper space.
Part of that supply-demand imbalance that's anticipated by many is twofold. It's the anticipated increased demand for the green economy that you mentioned, electrification, et cetera. And Rick Rule talks about the fact that so many of the world's population have not historically had access to electricity. So even if the developing or the developed nations don't move as fast as they would like to on moving forward on further electric vehicles, et cetera, that there's a lot of the world that still has a lot of catching up to do to reach a standard of living that most of us have in the Western nations have been accustomed to. But the other part of it is the supply side. And could you touch on that briefly as far as your view of why and to what extent there's been a huge shortfall of research, exploration, development, and production of the metals that are going to be needed in the next decade?
I think, I think if you look at all of the development or the countries that are big producers of copper, I think what you're seeing is a real lack of investment in, the copper side of things. And what's happening with a lot of these deposits, the ones that are in production, is they're either digging deeper, the grades are lower, they're having to move more rock to get the same amount of copper. So it's posing real challenges. And then there's a competition for other precious resources like water, where water is used in a lot of these mining activities, particularly as you go into Chile, which is obviously one of the largest copper producers. So I think what you're finding is, in general, it's going to become a lot harder for projects to come on stream. And then if you look at the capital intensity associated with producing a ton of copper and the new projects that's out there, and the one that you can probably use as a reference point because it was just fairly recently completed was Teck's QB2 project. And it's somewhere in the neighborhood of $30,000 per ton of on a capital intensity basis. And that becomes quite prohibitive for companies to try to, invest those amounts of money in the environment that we're in right now. So I think it's a combination of some of the challenges you have, even in countries that have a very friendly regulatory landscape for mining, but just the challenges of getting these mines built. And then when you look at the U.S. in particular, you've obviously seen the Inflation Reduction Act come into play. There's a real focus on bringing critical metals in. But I think what we're seeing, and certainly what we continue to see, is challenges with the permitting process, where there's a real desire to have these projects built quickly, but it doesn't translate into the approvals necessary to get you there. So I think all of those things are working against new production coming on as quickly as people would like.
If we could transition now from the metals themselves and the major supply-demand factors to prospective investors looking at when to enter investing in the companies, the stocks of companies that are involved in that space. Where do you see us at this point in time? I will just preface that by saying that a lot of our subscribers and viewers have been stacking precious metals, for example, and holding on to, in many cases, mining company stocks, that sort of thing, for years and years, expecting that there will come a time when their judicious placement and getting themselves positioned ahead of the crowd will have been a good thing for their investment plans. What do you see? What's your personal view of the investment landscape in mining companies in general, and at this time, and any factors you see as major trends in that space?
Yeah, it's we're almost coming in January. It's a bit like starting the school year. There's a bunch of conferences that come out, and people are back out there marketing the stories. And just recently, there were 2 conferences that were held both in Colorado. One was a Beaver Creek conference, which is more focused on junior mining companies, and then there was a Denver Gold Forum, which is more focused on the major mining companies. And I think a theme coming out of both of those is that there is a real dearth of quality projects out there, and I think as companies are looking, they're starting to, the M&A side isn't going to change. I think there's still a focus on people acquiring additional companies, so I think that's a real factor that will be in play over the next several years for sure, and it's something to sort of for your listeners to keep an eye on. I think the other factor, though, is just the major companies themselves who haven't invested a lot in exploration are really starting to run the ruler over companies, and these are the junior companies, the explorers. And I think what you're finding with the gold companies as well is they're also starting to look outside of gold in particular and thinking about copper as an example. And part of the reason why they like copper is because of the generally long life of the copper assets relative to gold production. So if you have a copper asset that has some gold credits, that actually plays nicely with the gold companies as well. So I think those are some of the themes that are out there. My expectation is we're in a bit of a lull right now. Prices have come off in terms of commodity, not just the commodities, but the underlying mining equities. And I think this provides an opportunities for judicious investors to look carefully at some of the names out there that have been beaten up, and really acquire those at a sizable discount today, and hopefully see those prices increase as we see some of the demand fundamentals come into play that we discussed earlier.
Yeah, it's interesting, human nature, that when things are demonstrating upward momentum, when that's confirmed by overall market activity and overall public participation in retail investing, that's people, it starts to appear on the evening news night after night. We have indexes, whether it's mining indexes or gold or whatever, hitting new highs from time to time. And then people will look at that and go, oh, that's what I should have gotten into. Yeah, but I missed the bottom, and woulda, coulda, shoulda. Whereas when we're at these times where there are values available, people then often, it's human nature to think, gee, I don't know, I have doubts, I don't know if that's the right time and the right place to put my capital or portion of my capital. And that's precisely the moment that Rick Rule reminds us that value investors will end up making their wise decisions at those times of entry points rather than trying to hit a perfect bottom or hit a perfect top for your exit. Can we zoom in a bit on Trilogy itself, the metals that Trilogy focuses on, and the projects that Trilogy is working on? When you visit us with us in the past, you talked to us about progress or roadblocks along the way to progress of developing a road that was necessary to really derive the value from a major project, and if you could talk to us about progress on that road, and then but start with what the metals are that Trilogy deals in, and so people can really understand that.
Sure. And just, before I do that, your comment about Rick Rule's, and a good example of that is, Rick's been talking about uranium for a long time, and uranium price was pretty beat up. And if you look at it now, it's just taken off, and the equities have done very, very well. So I think you're absolutely right. People have to just look at the opportunity to get in at these discounted prices, and and recognize that they are good opportunities that don't come along too often. So in our case, the two projects that we have are Arctic and Bornite. And you talked about roadblock. The biggest issue that we've been facing over the last 2.5 years has really been a permitting issue where the permit had been issued for a road to access the mining district. And then there was an additional supplemental work that was requested by the Department of Interior. The good news on that front is that the draft supplemental EIS is supposed to come out in the end of this month, September 30th. We don't know what's in there, but what we do know is that it should come out at September 30th. And then what we'll see is a final EIS sometime in the first quarter, and then hopefully the reinstatement of a ROD in the second quarter. So, the key, of course, is the devil's in the details. We'll have to see what's in there. And if there's any major changes from the work that had previously been done, I point out that work that had been done occurred for 5 years. So this, the work was very comprehensive. And so we're waiting for that. Before this process started on the supplemental EIS, back in May of 2021, the stock was roughly trading $3 US, and now we're just around 50 cents. And I think the big challenge that we've had is really the uncertainty created by this supplemental EIS process. So the fact that we're getting to an outcome is positive, and hopefully it will, really start a change in momentum in terms of where we're going. So the metals that I mentioned are copper, zinc, lead, silver, gold, and there is a real focus on obviously the copper and zinc side of those metals, but there's enough gold and silver to make it interesting in terms of giving us a number of financing opportunities to look at and consider. That's at the Arctic deposit. We have a second deposit called Bornite. We're putting a little bit more time and effort into that deposit as well, and there's a few things that are happening. One is we're looking at what's called a scoping study, which is we're looking at the potential of adding the underground portion of the Bornite deposit and processing that through the Arctic mill if we're not able to find additional material around Arctic. Arctic right now has about a 13-year mine life. These VMS-type deposits occur in clusters, so our expectation is that we'll see other deposits that we'll find in due course. But what we want to be able to demonstrate is that we already have an excellent project at Bornite that we can process through the Arctic mill, which could take the Arctic production profile from 13 years to something closer than 30 years. So we've got a study coming out in the next couple of months that will give us some clarity on that. The other thing that we've done, and a number of companies have been doing this, particularly with U.S. assets, is really working with the Department of Defense and Department of Energy to look at some funding sources, usually matching type funding. And so we've made an application to the Department of Defense for funding to look at exploration and study work at Bornite. And I think where the Department of Defense would have specific interest with Bornite is that there's cobalt and germanium that are contained there, and those are two metals that aren't mined in great quantities in the U.S. and are quite important, obviously, not just from an EVP perspective, but from military application perspective, particularly with respect to germanium. So we'll see where things go, but we put an application in, and we should be getting some feedback in the next 5 to 6 months. So we're hopeful that something positive will come of that. So I think those have really been the main focuses for us as we sort of head into the fall. And we'll continue to sort of update the market on those particular areas with obviously the focus on the road, the scoping study, and then this Department of Defense funding option that is being considered for Bornite.
Now, you just introduced tangentially there, another factor that we didn't discuss earlier when we were talking about supply, demand, one of the major factors we're told is something that reared its head during the COVID lockdowns, and that was this idea of strategic materials being accessible within the jurisdictions or close by to countries rather than far-flung across the world in potentially hostile jurisdictions. Can you circle back to your demand story, because you just brushed up against it here with your DoD and Department of Energy questions on these other strategic materials?
Yeah, I think I think both of those departments and the federal government have been very clear that they want to ensure that there's domestic, supply of critical metals, and so I think there's been a real focus on deploying capital to ensure that that happens, and I think there's been a number of announcements that have come out for different companies, whether it's with the lithium or other critical metals that are in short supply, where there's funding arrangements to either do study work or additional drilling. And our expectation is that's just going to continue, particularly in light of the lack of supply. And I think part of the story, of course, is a lot of these rare earth minerals are processed primarily in China. And, I think that's a consideration in terms of looking at having domestic supply. And obviously what we saw recently happen with the Ukraine and platinum and palladium coming out of Russia, and that supply sort of not being accessible to Western markets has also come into play in terms of people thinking more carefully about where those metals can come from. So I think there's lots of moving parts that are occurring on this front that are interesting. And I don't want to say that they're game changers, but they're certainly situations that we haven't, or opportunities that haven't been there in the past. And so, I'll be interested to see how this continues and, the implications of how this moves forward. But the fact that we are seeing the DoD and in some cases the Department of Energy writing fairly sizable checks to junior mining companies to allow them to move projects forward, it's very encouraging.
So is Trilogy a potential recipient or potential candidate for such government matching funding that you're talking about because of its work in this area of strategic materials?
As I said, we made an application for bornite, and the focus on the minerals there are copper, germanium, and cobalt, and all of those metals fit nicely within what the Department of Defense is looking at in terms of critical metals. So we think we will hopefully have put forward a compelling presentation to DoD, and we'll see where it ends up going.
Another thing you mentioned in passing, and I can hardly write fast enough as you're moving through these things, but one of the things you mentioned in passing was the prevalence of some amount of gold and silver together with your major deposits of copper, lead, zinc, et cetera, that you're mostly going after. And you mentioned about how that can help with funding. Can you clarify for our listeners, as prospective investors, whether Trilogy would intend to directly maintain ownership of the gold and silver that are found together with the other deposits, or are you entering into royalty relationships where you obtain financing from royalty or streaming companies who then buy those precious metals off of you, which is a revenue source rather than a metal source so much to your balance sheet?
Yeah, it's a great question, and what I'd say is this: it's a bit early days right now. We're not at the stage where we have a permit for the Arctic deposit, and that's a process we hope to start in sometime next year. But we've had a lot of interest from the royalty and streaming companies, and I think they look at the fact that the gold and silver are secondary metals to the copper and zinc and lead that is in the VMS deposit. And certainly the indications that we've had from some of the streaming companies is that there would be significant availability of credit to allow us to move forward in terms of funding our share of the capital. As you know, we're in a joint venture with South 32, and South 32 controls the other half of the JV. So I think it puts it gives us another option to sort of consider longer term in terms of funding. And, what I would say is from recent meetings that we had at the Beaver Creek conference, there certainly is a lot of interest in those type of possibilities. We're not in a position where we're looking to do that today, but it's something that's in our back pocket. And then again, I'd be remiss if I didn't, stress this. So South 32 has invested about $200 million into Trilogy. They've invested $145 million to get a 50% interest in the JV. They invested $30 million in exploration spending from 2017 to 2019, and they purchased Trilogy shares as well. So roughly $200 million. Our market cap right now is about $75 million US, and we have about $35 million, roughly closer to $40 million between our Trilogy balance and our share of the JV account. So the enterprise value of Trilogy is roughly $36 million. So I think if you look at this story of $200 million invested by a major mining company versus a equity value or enterprise value of $36 million, I think it gives you a good indication of why we feel there's a good story here. And I've mentioned this to you as well before that since April of last year, all of my compensation is in equity. So every single day I am buying the stock at whatever the price is, and the plan is to continue to do that. So I feel that my interests are very closely aligned with shareholders' interests.
Now, another thing you just touched on there that I wanted to follow up on is that because this should whet the appetite for our viewers, guys, pay attention here, because Rick Rule is going to be with us later this week talking about an upcoming investors boot camp, specifically focusing on royalty and streaming, and why he thinks that that's an important part of the ecosystem here for investors to be aware of and participating in. And Tony, you've been talking with us about the potential role that royalty and streaming companies could provide to Trilogy as another source of revenue and capital to make your capital-intensive investments more affordable based on some of these streams of precious metals that you anticipate. So this is there's a lot of angles here, whether it's the government matching funding potential based on your application for these strategic materials, whether it's the additional permitting you're anticipating and looking forward to on the ability to develop the road, to make the Arctic project accessible, etc. There are so many potentials that combined could add up to a very compelling story for your company. Any last thoughts that you'd like to leave with our viewers? Certainly where they can find out more information, but anything else that we haven't covered that you think they should be having in mind right now as they're considering Trilogy?
Yeah, I think you covered it quite nicely. And I think, 4 points. I mentioned the value proposition in terms of just looking at what South 32 has invested versus an enterprise value of $36 million. I think that's number one. Number two, we're going to have some announcements coming out with respect to the road, and that should be fairly soon. Hopefully that will give more clarity as to what the next steps are in terms of getting the record of decision reinstated sometime next year. We have a scoping study coming out later in the fall, probably towards the end of October or thereabouts. And then, as I mentioned, we've made a submission to the DOD in terms of looking at potential funding. So I think those are, the four factors that I would focus on. For more information on the company, people can visit, your listeners can visit our website, trilogymetals.com, where there's obviously a recent investor presentation and press releases and other information about the company. And I'm certainly happy to get on the phone and talk to anyone who's interested in finding out more about the story.
Well, Tony, it's always been a pleasure to have you here with us, explaining all of these developments and the unfolding story of Trilogy, which should remain of high interest to our subscribers and our viewers. And we're just grateful for your presence here on Liberty and Finance. So thank you for joining us.
And Donegan, thanks again for having us on the show, and look forward to catching up soon with an additional update.
Yeah, it sounds like there's a lot of stories here. They're going to have some outcomes that we'll need to let people know about, and hopefully they'll find out about it here before, or at least an inclination of which way things are heading before the masses find out, because that's where one of the things we like to do here is help people to be prepared, and that it means accessing information that can be useful for them to make prudent decisions, before it just becomes blatantly obvious, because everybody and their cab driver and their hairdresser is knows. Let's find out before they do. So, thank you, Tony, for joining us.
Thanks again.